So the first thing we're going to do is we're going to have a look at pre-letting expenses. So these are expenses that you've made before you've even started getting any income in from the let property. We're then going to look at how we're actually going to account for the income from that let property, whether we're going to use the cash basis or the accruals basis, and how those bases differ. We're going to turn to the allowable property expenses that we can actually deduct for tax purposes. And we're going to look at the difference between capital expenditure and revenue expenditure. We're going to move on to look at residential property letting and the replacement of domestic items relief. And finally, we're going to look at what happens if you use your car for the purposes of your let property, so your vehicle expenses. So as soon as your letting starts, that's obviously when you're going to have the income, and that's when the business starts. But before that, when we're preparing for the let, that is when you're going to have these preparatory expenses, and that you're going to need to take account of these, because you can actually offset these expenses eventually when you start getting some income against which they can be deducted. So they can officially be deducted from your income tax once you start to receive some revenue. However, there are some special rules that you need to satisfy before you can actually offset these expenses. Revenue expenses, on the other hand, don't result in a new asset. They result in maintaining the value of the property. So making sure the property is still kept at that high standard. So repairing things that have gone wrong to the property are keeping it at that same level. They're not making new assets. They're just keeping it at the level that it was at. So repairs, redecorations, replacing fixtures such as basins and baths that are perhaps broken, renovations as long as they're like for like, and reservations to improve the quality of the asset, you can only use if it is equal to the previous asset that we deducted. And we're going to talk more about that when we talk about replacement of domestic items.